Returning to our top story now, the trading day is over and it was a hectic one on the markets as investors in both Toronto and New York hit the sell button at a historic pace. The volatility comes as fears continue to grow about the economic impact of the coronavirus. And Richard Southern joins us again for a recap of those numbers. What a day, Richard.
I mean, I've been at this a while. One of the worst I've ever seen, Sen. 10.25% was the loss for the TSX, and the only worse day than today was the 87 crash, October 87 crash, for those old enough to remember. I mean, look at that. Just over 1,600 points down on the TSX today. Dow Jones Industrial Average down more than 2,000. Cynthia, we had $5 trillion wiped off the Wall Street market just today alone. Really dizzying the sell-off was today. And it begs the question, what should I do with my portfolio? A lot of people have just put extra money into their portfolio with the RSP deadline. I asked Greg Taylor, he's with Purpose Investments, and he says you maybe want to start thinking about nibbling away at the beaten down markets.
I would say it's time to start picking away. Certainly don't go all in yet, and don't put anything in you can't risk being early on. But it does feel like these are the times historically where you want to start putting some capital into the markets. Certainly there's a lot of expectation that Fed and other governments will be coming out with a response quite quickly. And when that happens, the market is so oversold, it could snap back quite quickly.
Cynthia, one of the most interesting things I found today was there was only one stock that was higher on Bay Street, and it was Dollarama. And on Wall Street, there was only 10 stocks higher, and one of them was Dollar Tree, the big U.S. dollar store chain down there. So why are traders buying dollar stores and nothing else? Because the thinking is a recession is coming and consumers are not going to have a lot of money to spend. That's kind of the scary takeaway today.
Right. And you wonder, the more we talk about it, does it become a self-fulfilling prophecy because people are afraid to spend their money? Absolutely.
But I mean, you just had Italy, the prime minister there announcing the entire country is shutting down. So it's clear that this is going to impact the economy. To what degree, though? We don't know exactly yet.
Absolutely. Now, Richard, a great deal of this volatility has been triggered by the oil industry, and you've also been looking into how all that played out.
Yeah, so basically the world lately has been awash in oil. We got too much of it because of, Chinese factories shutting down because of the coronavirus, less manufacturing going on overall. So to stabilize the price, you need to take less oil out of the ground. But Russia wouldn't agree to that. OPEC wanted to cut back in production. Russia wouldn't agree. And then over the weekend, we had Saudi Arabia, the world's biggest oil producer, actually increase the amount of oil it's taking out of the ground. Experts, Cynthia, say it's a price war. It's a battle for market share. Some are wondering about Mr. Putin's perhaps motivations as regards the United States with all this. So we saw the price of oil drop 24%, biggest one-day drop since 1991.
Wow. And finally, that price drop means significant savings at the gas pumps, but are people going anywhere?
Well, that's the thing. But this is kind of the silver lining because we don't see a drop like this at the pumps every day. Cynthia, it's not going to change tonight, the price of gas, but first thing Wednesday morning at 12:01 a.m., we could see a 10-cent decrease, which would bring us down to about 93 cents a liter, well below $1. So big break coming at the pumps, not tonight, but on Wednesday morning. Obviously, that low price for oil, a big trouble for Canada's economy, but drivers will certainly take the break at the gas pumps.
All right, Richard, thank you very much for that update.
Thanks.